The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here this 28th day of March, and certainly a happy Easter to everyone out there who's celebrating. And this is fascinating because the S&P is now catching up. And I'm going to go through, in fact, what we'll do today, because it's the last day of the week for the market and the last day of the month. Let me go through this as thoroughly as I can, because this is the most, I would have to say, this is the most reluctant and uncelebrated recovery high in the S&P that I can recall. And in some ways, that, of course, has to be considered to be very positive, because you don't see those 10,000 Dow hats. You remember when they had those, and the Dow promptly plummeted after that, and then it came back, of course, and came surging back. But what's most important about this move, and let me show you. If you're looking at Tiger TV, I'm going to expand this a little bit. I'm going to go through each index individually. I'm going to go through them like this. Here's the Dow, INDU. And the move today is a very quiet, very subtle, very quiet leg. I'm calling it F because it could recycle up, and I hate to do this, but I need to do it. This particular chart here that I send my subscribers every single day, and I go through it. I mean, this goes back and back and back. Every day we're looking at it. Every single peak and trough is monitored. And what's really important about this is that in the waveform that I like to look at, there are still other chart formations that give you a kind of a heads up. This is literally a heads up, because we're looking for the neck that might form. But all the patterns that, I wonder if I could do that. All right, I've already modified it. The oval formation, this is the second. It's actually the third one, but the second in just recent times, because the first one concluded at the end of February. So we're only into the end of March now, and that's really kind of quick to have another oval formation. This particular oval formation, and I'm going to type it in now. The day is only 2 hours, not even 2 hours old, 1.5 hours old. So it would be very foolish of me to type this in as if it was the final thing, that's the way it has to be. But most importantly, what I'm going to show you here is that the 9-period exponential moving average, that maroon line, do you see it as maroon? Yeah, it's kind of maroon. Let's call it this very dark line here. That has been fantastic support. But it's kind of support that should be when you reverse a magnet. You know how a magnet has an attractor? It's like it pulls in whatever it is connecting with, a piece of metal, and it repels if you reverse it. And what you want is that 9-period moving average to be a repellent line. In fact, for the upside, you want it to be a propellant line. But the more you start hugging it, the more it implies that there's going to be some kind of a retest, and you're getting closer to making that line, that look-back period of, in this case, it's smoothed out. It's a 9-period exponential moving average with the greatest weight on the last close. And it looks back. So it's an internal indicator as opposed to, say, a Fibonacci, which always has those set points. Very, very important. But they are set points. And then what you do is you take it from the bottom to whatever, to the top of a particular price movement or down, and you start the measurement, which of course also says that you're using internal price because you're looking at the highs and the lows. But this is a little different because what it's saying to you is that in the look-back period, that's why I always talk about the 200-period moving average, as being absolutely insignificant until you get closer and closer. Then it becomes a magnet. And then it becomes a magnet where the price goes up and down until it becomes a propellant if it's on the way up or a repellent if it's on the way down, and then it breaks away from that level. So in this particular instance, what I'm looking at here is that the chart formation of the body, and then you've got the very quick head and neck of this pattern that I call the stork leg formation. And you remember the stork leg formation isn't just a pattern. It's a psychological mantra that says, buy the dips, 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 and it goes on. It goes through the daily, then it goes through the weekly, then it goes through the monthly until it drives the bears absolutely nuts. And when they're finally ready to throw in the towel, that's when it's made the neck formation, and the beak formation comes all the way back into the body. Well, this is a double stork leg formation. This golden egg that we're looking at right here, where I've got the body, we've just started what I'd call the neck, but that neck can be anything from just above 14,563 in the Dow. Today's highs 16 points higher at 14,582. The chances are it'll go a tad higher. It could go quite a bit higher. But I'm looking at this and I'm saying, we've looked at this pattern many times before, and it failed and had a sharp pullback to the 13. Let me double check. I've typed it in 7 times. 13,784.01 level when it was up at 14,044. Not much, 160 points or something like that. 260 points. But what I'm looking at here is that when I go through, and I promised yesterday that I said I would go through a number of IBD stocks. So let me do this. Here we go. The Dow is making a pattern that says it could go much higher in that neck formation. It is certainly well within the up channel that I've drawn. There's the inside track on the upside, and the lower up channel support shows the support level way down. It's rising. So on Monday it would be at about 14,319, and then it rises after that. But the most important one is the dashed line. Anytime in the next 2 weeks, if we break 14,200, you're looking for a consolidation that should take it back to the oval formation right there, between 14,050 to maybe 13,800, something like that. Okay, so I've set that in motion. But most importantly, the week is about to close. Well, we don't know where the week is going to close, but this is, on a very conservative basis, 39.46. Leg C, in fact, I've still got it as a potential leg B, but we'll call it a leg C for now. And that means that 14,230 will be the 9-period exponential moving average support, and the monthly chart is very strong. It is in leg C breaking out to all-time highs. The previous high was 14,198. If this is leg C, then all I can say is that I have a measured move, which I've shown subscribers. It's a measured price move and time move, and we'll see where it goes. So that's the Dow. So very, very positive. But on a short-term basis, I'm looking at my Dow Quartet, GE, IBM, MMM, UTX is saying, we're getting a little tired. Yeah, we could go a little higher, as well as, I did not want to short it, but Lennar, one of the terrific home builders, he has a clue to say, I'm getting tired. I've made a peak F in the daily. LEN is the symbol. I'm making a peak F, peak D. There's no way that I'm going to get to 44.01 or whatever it is, 43.91 today. So there's going to be a peak D in the weekly, and the technicals are actually quite poor, and it's like E in the monthly. So I'm cautious. We are mostly in the short position. We've taken great profits in one particular stock. We still have a core position. It's up 43%. We've got out of our GE. I don't know if I'm that happy about being out of GE, because I think it's going to be a fabulous stock for the year. I want to pull back. I'm looking at this and I'm saying there are select stocks that have acted well, that are getting toppy. There are some stocks that are okay, that are starting to build a really nice base. I'm putting GE in that category. And then there are stocks, I'm going to look at them in the IBD Investors Business Daily in a moment. Now let me go to the S&P. So the breakout in the upside for the Dow would certainly be up in the 14,680s level. And then I'll have to say, hey, if that's the neck, we could have another high-level consolidation, because there are just so many people who are either negative or have just gotten in. And that's the reason why another reason why I'm very cautious here. I think that the folks who have just started getting in fresh, not the ones who just keep putting in monthly, I'm talking about the ones who have really decided the market. They're listening to everyone. I haven't heard a single person except the Perma Bears who are not saying, oh, S&P's got 1,600 or 1,700, even 1,800. There has to be a pullback before I'm convinced about those next higher highs. Now, the S&P has broken out. It has started its neck formation in this ChapmanWave technique called the stalk leg formation. And that's great, because that says the stochastics at 83%. That's good. We did this in my last Master Trader series. And for those who were in my last two Master Trader series, the all-day one, I have updated some of those charts, found fabulous examples. I'll be sending them off. One is an example that I'm putting in. It hasn't completed, and that'll be the test of this particular technique called the Chapman Wave Flat Base Restart. But in the meantime, look at this. The S&P has gone to leg E. Well, if it's in E, and the Dow is in, what did I say the Dow was? I think it was also ES, Dow, yes, leg F, I said, I think. They could recycle. But I've started to put a lot of weight in the MACD, fast-moving average, being very weak, even if the stochastic's holding up, because the stochastic is a shorter-term, for me, a shorter-term duration indicator. The MACD is the big one. In fact, I haven't done this for a long while. This weekend, I hope I get a chance and I remember it. I've done MACDs and stochastics in double the time, to see if they can expand it even greater. You know how I love to go daily, weekly, monthly. Now, the S&P weekly is in leg D. Now, that's really interesting for me. It's extending leg D right now, so it's not a peak yet. It's a leg D. How does this discrepancy resolve itself? Well, the only way I can think of it, and the MACD is good, and the stochastic is really good. On balance volume is saying, hey, be careful. And the monthly is strong in leg C. Now, it's gone to a high today of 1567.78. I had spoken about this a long time ago. I showed these charts over and over, the monthly charts. And I said, I suspect before we get a very strong pullback that there's going to be a chance that the S&P goes above the previous high of 1557.87, but it doesn't close and doesn't break the 1576 high until we get peak C, and then peak C should dip quite sharply. That's the monthly chart, so we're going to be watching. That's just my expectations. But in the meantime, it's trying to tackle the 1576.09 area. I'll be right back, and we continue with this analysis as soon as I get.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back. Now, this is really interesting. Wasn't it prescient yesterday when, by mistake, I put leg D in for the Dow Diamonds when it had missed making that leg D, and I had to get rid of it. I've put it back. So this is now interesting. Dow Diamonds leg D, S&P cash leg D. The SPY is a couple of pennies away from 156.81 at 156.58 to make leg D. That is very interesting. Let me just check the New York Exchange because I want you to give you parameters for the NYA. NYA.X. Ha! And the weekly New York Stock Exchange is within a couple of points from 9128.90, which by 1 penny will make leg D. Ho! That means that we are still going to go a little higher. Maybe it's today, maybe it's Monday, and next week then is the week that we have to be somewhat careful. So here we go. Let me run these down. The S&P, I suspect, is going to push a little higher, and that little higher says that I would not be surprised if it does fail in this move under the 1576s. So we're real close. So it's within maybe a day or two of a turn down. I haven't got the signal yet. I thought I had, but I don't. And the Qs, 1, 2, 3, the Qs are right now within 6902. was the high of C1, C2. It needs 69.03. The high today is 68.94. So it needs another 10 cents, 9 cents to the upside. That makes leg D, but it's walking the 9 EMA, and that's very important. Now, the weekly chart says if it does make that new high, it's going to be G/C, walking the 9 EMA. But the monthly chart says it's got all the way to go to 70.58 before it makes leg D. And here's that up channel. Remember that the up inside track that I talk about, that's going to be the resistance, and it's making an apex formation towards the top. Oh, that is so fascinating. Now, the IWM, and then we're going to take some calls. IWM right now, leg C in the monthly, leg D in the weekly starts at 94.97. It has 34 cents to go, and then it makes leg D, and that D will coincide with the phantom peak D in the leg D in the daily. Oh, isn't this so exciting? So I'm going to stop right now on that because we've got a caller waiting patiently. I'm talking about the dollar just briefly. The MACD is deflecting lower. The stochastics at 73%, and the dollar is possibly making a peak F, having gone through that golden egg, the body to the neck, and now it might be fading and about to start the head down. I haven't got it complete. No, I haven't got it complete yet. But I have some kind of a retest of the low of 82.05 occurring 1, 2, 3, 4, 5, 6, 7, 8. Maybe late next week. We'll see. We're going to watch that real closely. First caller we've got Rich in Orlando. Hi, Rich. How are you?
Good morning, Basil. How are you?
I'm well, thank you.
Good. I was concerned about the FAZ. I mean, the financials have been very strong, and it looks like some of them are starting to turn. But it's like the FAZ, I guess, is going to have a reverse split here, I guess, at the end of today or Monday.
Oh,
and I'm
man.
I always hate those reverse splits.
I hate those things. I actually I think for an insurance stock, it's fantastic to have them in the low prices because the percentage is so nice when it moves to the upside, and you've got, it should be about the same as it would be if it was at $40 or whatever. It's at $10.54. But you don't have to put that much money. I like that. I prefer, of course, you could buy, a quarter of the other, but it's just fun. I happen to like them. So it's trading at 10.54. This is the financial bear, 3 times shares. I was going to get to the XLF, which is this trades on the root, which is the XLF. Actually, the root is the financial index. The XL. Correct. Oh, I haven't done that for a long time. I almost forgot the symbol. I know all these symbols, XLF. And I forgot. Yeah. It's the what?
XLF.
No, that one, I'm talking about the actual index itself. Anyway, it doesn't matter.
Oh, you mean the FAS?
No, it's a dollar sign something or other. It's I don't need it because it trades exactly like the XLF. Now, the XLF, this is really interesting to me. The technicals have failed very poorly, and yet it's holding with a nice base on the XLF round about $18. So we're going to talk about this and what the implication is, what the implication of the monthly chart is, and what the peak D in the weekly chart is saying. Oh, this is such an interesting market. We'll be right back with Rich in Orlando and Mark in Denver straight after this.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman. Okay, we're going to have to go real quick. We've got a whole bunch of people. We've got Rich online right now. We're looking at the XLF. I just went through some of the bank stocks. Do you have a position in this at all?
No.
Okay. This is my recommendation. Now, because there's a chance that if I'm wrong, you will know really quickly, and that should be by Tuesday afternoon, Wednesday morning. At this particular point, I feel comfortable discussing what I'm about to discuss. I believe that the XLF is making a sideways consolidation, but that it's at 18.16, but that the 9-period exponential moving average at 17.88 on the weekly chart is going to be touched. I'm watching the MACD, which is still strong but turning down. That is the fast-moving average. Folks, if you're looking at my chart, the one on the left is always the daily, the one in the middle is the weekly, the one on the right is the monthly, and when I need it, I pull up the 120 chart, which is somewhere hiding away. There it is. 120-minute chart. We made a double top at peak D at the 18.48 area, and it had a ChapmanWave instant restart, but it also had signs that there could be a flat base restart. I don't want to get into that now. But there's also a lot of information here that says if the XLF breaks 18 by next week, Tuesday, Wednesday, then there's a real good chance that 1772 will be the target on the downside of first big support. That's the 200-period moving average, which I've ignored up until now. Now it's back in focus. On the upside, today it's only up 0.1, and that's not good. You need the financials to really sustain a move, and I think they are faltering right now. My suspicion is that if you are looking to get into the XLF, if you got into it now, I would say not to buy it now, but to buy it if it breaks 1828 to 1830, the resistance on the left. Then I would nibble at it for a potential test of the top, which is only at 1848. I don't see too much on the upside right now. I'm going to suggest you hold off. Let's look at it together again. Call me again. Let's look at it together maybe Wednesday of next week. Tremendous amount of information will be imparted over the coming few sessions. That's when I think we're going to get a better feel for it. So I would not be buying it now. We are
talking about the FAZ, the short position, not the long position.
I understand, but I'm talking about the XLF because that's your route. Right. So if you're in the all right. So let me get back to your question, which is the FAZ. I'm going to suggest are you in it at all, or is it?
No.
Okay. If you're thinking about the FAZ, here's the trade. I was so busy trying to look at the upside, the up and down potential, that I forgot that your position was to possibly get a position in the FAZ. I'm going to recommend that you nibble. I really do mean nibble. I don't know, when's the split this afternoon?
I think it's at the end of the day. I think it's how
right. Okay. Well, it doesn't matter. Whatever it is, you're still going to nibble. You'll have either if you buy 10 and it switch to 4. All right. So you'll have the number itself of the price will be higher, but your position will be less. So correct. I'm going to suggest that you actually nibble at it right now, and I'd make it kind of a tight stop of $10.43. It's 9 cents away, and the reason why is because if it's going to fail, once it takes that out, it'd go quickly down and make the arch formation back to 10.29. If it's going to succeed by Tuesday afternoon, it should be pushing 10.75. You could either wait and do nothing right now, or you could just nibble, because if it's going to happen, it could happen real quickly. That there's just a sudden Cyprus is off the news. Now we're looking at the market. This for an all-time high. This is kind of pathetic right now because there's no volume, there's no enthusiasm, there's no nothing. So I suspect it could creep even a little bit higher, but the underpinnings to me seem to be failing. I think we need a good sideways to down move to consolidate to be able to go much higher. So I think you got the right idea with the FAZ. If you want to just nibble at it right now, and then you can add to it if it breaks above $10.75, a little bit more. I wouldn't get too carried away until we get real signs that it's crossing $11.42, the 9-period exponential moving average, which at this point looks quite far away. But these things move quite quickly. So I hope that helps you.
One last question. So if you nibbled now, your exit point would be, where would you put your stop?
What I said is the stop would be $10.43. $10.43. Because I suspect if it goes below that, it's going to retest the low of $10.29, and we'll have time by next week to relook at this thing. But it should be performing the XLF should be performing well today, and it's not. So I'm saying to you, I think this is a move that can give you a nice percentage, but it needs to work quite quickly, and I would only just nibble a little bit right now. I need confirmation.
Okay. Listen, I appreciate it. Thank you very much. Have a nice weekend. Have a nice Easter.
You too. Have a great Easter. Have a great weekend. Let's go to Mark in Denver. Hi, Mark. How are you?
Good, Basil. How are you?
Very well, thank you.
Good. Hey, couple quick questions.
Yes.
I nibbled on the UTX option play that you had out there. And
right.
Actually, it hit what I thought was our entry. But so I'm in it, and I got I bought some more when it dipped the other day. So I'm in the April 2095.
Okay. Let me just quick. Yes.
And I'm just wondering what you think if it can make another leg here before the market turns down.
Okay. It's acting quite well. DuPont, we're looking at DD trading at 49.6.
UTX.
Oh, UTX. Okay, UTX. Oh, that was the original one that I took off. Okay, good.
Yeah.
So, yeah, I almost bought UTX this morning for us. I wouldn't have got it because it gapped up, but I liked it only because if it is peak B and this is oval pattern which just broke to the downside concludes a beak formation, then UTX should actually rally a little bit more and just break the 95 round number high. So this is what I'm going to recommend to you. So you're in the money right now, right?
Well, yeah, I mean, I got the April 20s. It's a 95, so it's an out-of-the-money call, but I bought them. I think my average is 52 cents.
Oh, so you're a little bit down.
It's trading for 62.
Oh, yeah, it is. Okay. Okay, can I make a recommendation?
Sure.
I don't like what I'm seeing right now in the market. UTX is acting quite well. The monthly and weekly are just looking so good. But on a short-term basis, I think if the market pulls back, I'm sure UTX is going to. I'm going to make a suggestion that if you're in the trade, you don't have to do it right this minute. Just add up whatever it is, what your gain is right now. If you've got a nice percentage gain on a very quick move like this, I would take a chunk off. And the only reason is, if the other part flies, it's going to make up for what you've just taken off.
Right.
And if it fails, you know that you're okay. You've made there's a minimal loss.
Right.
That's all I want you. You don't have to do it this very second, but just think about it. The 120-minute chart, nice action. It looks like it actually wants to go higher, but all you can do this. It's trading at 93.47. If it goes to 93.37 over the next hour or so, start taking something off. And if the market has given back and the Dow's only up 20, S&P's only up 1, take something off. Just give yourself a cushion. This is my trade for a little later on. Twice now I've tried to do it and we failed to actually implement it the way I wanted it because it was at the 90 call was what I wanted, and I forgot about it the one day that we should have done it and I didn't, and then the 92.50 was the other one. So I think it's on my list as it's my Dow indicator stock, my Dow quartet. It's telling me that there's just enough inside strength at this particular point, but that strength is starting to weaken. So I'd be a little hesitant at hanging on too long because the stochastic and MACD in the daily are actually quite poor. The price is acting well. Okay, so I just don't want to fight it. So those are my parameters, okay?
Okay. Do you have a minute to look at DD as well, or no? Yeah,
let me just one thing. There's a question in the den. All right, I'll do it for both of you. In the den, there's a resistance. See, this is so fascinating. There's a resistance line that is the falling axe formation. If DuPont is able to break just above 49.40, it's at 49.18, either today or Monday, it'll say, wow, maybe it has the potential to at least attack the 49.50 to the 49.78 highs of last week, the candles of the 26th and the 25th. But my biggest fear about this is that the technical started to fail with the price. It's got nice support on, I believe it's a 20-period exponential moving average. So I'm going to just say that if DuPont starts to pull back underneath, it's at 49.19, 49.98 to 49.90, 48.90, I would say, okay, just don't, that's not the way to go. Get out of any positions you're in on the long side. But the weekly is still strong. But I'm just doing this because there's a good chance that DuPont will come trying to fill the gap below 48.56 if it starts to fail in the next day or two. Okay. So thank you very much. Have a great weekend. And let's go to Trevor in Aurora, Colorado. Hi, Trevor. How are you?
I'm great, Basil. How are you doing?
I'm very well. Thank you.
Yes, I'd like to look at Nordic American Tanker, NAT. I bought 1,000 shares at $8.50 a couple months ago.
Oh, that's fabulous. You know, I mentioned this in my newsletter at some point, and I just never followed up. It fell off my radar at exactly the moment that it was giving me all the, sometimes the waveform does exactly what it's supposed to do. And me, the human being, I forget about it. So there are a couple of people. I also had an email just moments ago about EXM, which fits in this category. Folks, we're looking at Nordic American Tankers Limited. Now, I remember seeing the guy from Norway, I guess, the CEO, and they've never failed to pay out for 30 years, every quarter, whatever it is. The dividend, they've increased the dividend. He did everything, and the stock went when he was talking about it with Kramer, I haven't got it on this particular chart, but I notated it on another chart. It was up in the 16s or something like that. I don't know what it was. It was way higher. The thing went down to $8.15, and now it's turned around. I think it has turned the corner, but I still think there's going to be some backing and filling. So I'm going to make a recommendation. Don't do this right away. You've got a day or two to think about it. I would recommend take a quarter off of your position, first of all, to reward yourself, and that quarter also to put back, if it goes back to $11.10 to $10.70 or 80 cents. You'll put that back, even if it pulls back below, because that's profit that you're going to be using. That's number one. Number two is, I've got this as leg B up in the weekly chart, but it's the leg B in the monthly that impresses me, that says $10.46 is tremendous support. So I love your position. I'm going to suggest that you just take something off for two reasons. One is to reward yourself, and the other is that you'd like to put that back and treat it as your trading position to get good practice, because you might be able to hold this all the way through the year if it doesn't break $10 and say 30 cents or $10.20. Maybe it'll be even a little bit more. 990 is the 9-period moving average in the weekly, but you don't want to see it go all the way back there. So I'm going to say hold tight, maybe take a little bit off, and let's look at it again together in about 3-4 sessions time. Why? Because if it's pulling back to the $10.98 level, I want to be able to look to see how the MACD is doing. But if it breaks out in the meantime above $12, I will have missed it, and a lot of people will have missed it, and then I have to reassess it, so you'll be the reminder. Congratulations, Trevor. I'm also going to do EXM at the same time. EXM is another one of these shippers. It's XL Maritime Carriers, and that other one was Nordic, or Nordic, whatever it is. And this one, I'd say be careful with EXM. It's trading at $1.17. It's got a doji candle in leg F. The MACD is very good. Stochastic is okay. I suspect it's going to pull back, and I would re-look at this for Sandy. Sandy, I'm going to recommend that you take something off right now if you have it. That is something you put back. The part that you take off is what you'd put back between 95 and 85, but I want to look at this again next week. So these things are working together, and I'm going to do this as well, Trevor. Aurora Company, it's Aurora. Trevor in Aurora, dry ship is not nearly as good. It had a great spike off the low of 1.78. It went all the way to 224. That is a fabulous percentage gain, but this is not as good looking a stock at all as EXM, although it's $1 something, EXM. But there I would be very light in EXM. I wouldn't get all that way heavy. The one that you have, NAT, that's the one, and there was another one that I can't remember offhand. That is also, these are really good companies. Nordic American Tankers. The guy's done what he said, except it dropped by about 50 to 60%, or even more actually, in the time that he's talking about. But now is the time to be concerned. Now I'm a little careful. The reason why I say take something off is I suspect we're going to have a pullback coming up fairly soon. And I don't know yet whether this is the 5%er or this is going to be a deeper one. I just don't know yet. I will know a lot more. I'm going to do work over the weekend, and I'll know into early next week. But then the shippers should also pull back, because they're always late to the game, so they are catching up. But I suspect that they will be pulling back, but a chunk of their consolidation has already been done. Now you're looking for better entry prices on a pullback. So congratulations on a fabulous trade, Trevor, and let's speak again in about 3-4 sessions' time, okay?
Thank you. I'll call you next week.
Thank you.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. In If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. Now, a couple of questions in the den. Now, if you know anything about trading or trying to find sources and resources, the den is just a fantastic instrument, because what it is, it's a chat room. It's not really a chat room. It's a room to discuss trades and positions that you have, and so folks can see all the charts that I do that I do during the breaks. I'm busy typing away and showing the charts, etc. So as I'm typing, I haven't done it yet, but I could even grab one of my shorter term E-minis. This is the E-mini chart that says ABCD in the 10-minute chart. I could grab, all of these things are very, very nice to see in everyone's technique here at TFNN, no matter who it is. So the question was Baidu, and Baidu, Zip has no trade, but he wanted to know what I think of it. Well, on a very short-term basis, the monthly chart I still think is looking terrible. It looks like it wants to go down and test the candle of August of 2010 between 88 and 76. It's trading at 87 right now. So that's very close by. If it breaks under that, then the next support is down at 65.90. But if there's a bounce, and this is going to be very important because we've got a rotational today and yesterday were really important to me because we got out of our DDM, which is the 200% long position we bought at the opening on March the 4th, a couple of days ago. Fabulous gains. You can imagine 200% long. And we've gone to the short position with a very tight stop. And I want the tight stop because if I'm wrong, then the Dow is going to make that neck formation, the body and then the neck. And that neck formation, I don't want to presuppose where it's going to stop. I just don't want to even be in the short position until it concludes, and then I'll go back to the short position. I actually tried to have a half position long and a half position taken off of the DDM and not get the DXD because I was hoping that I'll be looking at the SPY and the diamonds fulfilling those requirements that I was looking at for the upside, which it's done without me. But it's really not that much in points. It's nothing. We haven't. What, the DDM is 87.75. We got out at 87.47, I think it was, and 86 something. It's no big deal. But it's being wrong, and if the market continues higher, I don't like that. I never like that. So Baidu is one of those counter-trend stocks right now that could have a little bit of a bounce. And if you had asked me, would I go long? It's at 87.30. I say, you know what? It has a chance to get to 91.52, the 200-period moving average. I'm sorry, the 9-period moving average in the weekly. But if it fails, and the daily is in leg A, B, it's already in leg C. MACD is moving up fabulously, and the stochastic is moving up at 41%. It's not great, but it's moving up. The price should really have been up at 89. So I'm going to make a recommendation that at this particular point, I would just say to you, if you want to just nibble at this, not treat it as a position play yet until other things happen in the weekly chart. The stochastic is at 8.9%. I want it over 15%. Okay, nibble. But I would say to you, step aside for $89, $87. There are much better players right now. And the risk is that all it is making is an H pattern, and it's going to come back and retest the lows. So I'll look at it again over the weekend because it is, this is the opportunity for it to move higher. So the only other thing I would say is if you want to nibble at it here, get a quarter position and have a stop at 87.35, have a stop at 86.60. I think that's fine. But it's not even moving today. It's down 78 cents, not moving with the market. My preference is just to stay away. The next question was, DD, don't tell me that's a break. Is that the end of the show? DDD, it's exactly the same except that DDD, which is DDD, is acting a little better. I do like this. I'm going to recommend nibbling at DDD at 31.80, and you can put a stop of 30.80 because this one looks like it could go a little bit more. So stay tuned for Larry Pesavento. I want to wish everyone a happy Easter in Saratoga, Bob. It's just a